Michael, I'll start with you just off the back of Rick's comments there. I mean, how much we've seen yields move in the last couple of weeks. Is the data on the economy matching that in the same sort of level of bearish tone as the bond market move is?
I don't think so far the data is matching that, but I think some of the forward-looking indicators are sending a cautionary signal. And I think something we're getting really concerned about here is capital spending. And last week we saw some of the data on capital spending that predated some of the intensification of the trade war already look pretty soft. That's probably not going to get helped much by what we're seeing with business sentiment lately. So I'd say the spot data we have right now suggests an economy that's still growing, at or above trend, though there are a few cracks showing up. Again, not in the household sector. Consumers look fine, but it's really businesses, and our businesses are going to lose confidence, and that shows up in weaker capital spending and potentially hiring. So I do think, the bond market is picking up something here that, there are some cracks in the facade that the bond market may be discerning here.
Whether there's cracks in the growth outlook, Tom, or what, you have been bullish on the U.S. market and have sort of even, I've seen you tweet and repeat the idea that the U.S. can be a safe haven even when you do have these trade and growth concerns heat up. Have you changed your view at all?
No, we haven't. I do think that there's some reasons to not be too bearish, among them being the U.S. is the safety trade, and as Michael's pointed out, there's some real resilience and dynamism in the U.S. economy. But of all the parties affected by this trade war, I kind of think Jamie is the front end of CEOs beginning to cry uncle. And I think that ultimately puts some pressure on the U.S. to maybe come to a resolution sooner. I think there's probably a lot more commitment on the China side to endure more pain.
On that front, though, Tom, would you say that the political side has, in fact, come round to support the president more clearly on his hard line, which perhaps gives him a little more wiggle room to continue to push hard?
Yeah, that's right. I think from a political perspective, I think the Democrats and Republicans in Congress support what Trump's doing, and I think that's helped embolden him on a hard line. But I think what's changing is I think CEOs are just going to start to get in line and start to notice their book-to-bill is getting hit, conditions are slowing, financial conditions tightening. These are things that ultimately raise a lot of risk about what it means for, as Michael said, capital spending, but also hiring in this. As soon as hiring happens, then consumer confidence will weaken.
Michael, you've recently adjusted your sort of call or expectation for the Fed. What do you think the Fed's going to do this year, and why are you changing your mind?
So we've always thought they'd be on hold this year. We thought there was some chance they would hike next year. Now I think the risks are looking more balanced between the next move being a hike or a cut. We've always felt they would, even with this new inflation framework they're looking at, that they still probably would only cut if they felt that growth were deteriorating to something like trend growth or even below trend growth. I think that risk has really grown in the last few weeks when we look at some of the data. The second quarter looks like it's going to come in. We have it penciled in around 1% GDP growth. We'd obviously want to average that somewhat with the first quarter, but that is getting you, a little bit dangerously close to trend growth. And I think in that environment, the Fed may feel that, some extra stimulus may be needed for the economy. So I do think, it still looks to me like the Fed is on hold. That's certainly the message they've been sending in the last few weeks. But I think the odds of the next move being cut have increased as we've seen some of this business caution evident in some of the surveys that we've gotten recently.